We're in Cass County at the Nebraska Soybean Management Field Days, joined now by Clint Hoffman, who is with the ARC Group. They are in Lincoln, and Clint, you're here talking with producers as one of the fundamentals. Not only we talk about soybean production, but marketing that crop, and it seems like we thought we kind of had this thing figured out, but the market continues to see a lot of variability and a lot of vulnerability. So what I assume you're talking with is having farmers really develop a plan.
Yep, that's one thing we hit on. The first thing I talk about, I was at a conference in Chicago last January. They mentioned that only 10% of people actually write down their plan. So everything guys are learning out here, not just marketing, make sure guys write down a plan, and we're focusing on trying to make those futures price decisions over a long-term period, usually pre-harvest. That February through July, August time frame is a good time to be setting futures prices. So trying to make that a big picture plan, and instead of just focusing on this day-to-day volatility. It's been kind of a rough week for the markets to be talking about grain marketing, but also shows the importance that you have to take care of that risk somehow.
Well, that's probably one of the things is the USDA report that came out and really had a lot of surprises, some numbers that people weren't expecting, and so. But one of your probably key advices is don't jump so fast. If you do have that plan, stick with it, and it should work out.
That's right. If you're doing the seasonal grain marketing strategy, you got quite a bit of futures prices set on your insured bushels. So after a day like yesterday, we don't want to panic and make rash decisions. So we'll see how these numbers keep coming in. Definitely a surprise yesterday when they brought that yield up above trend on both corn and soybeans instead of below trend.
Most people that I've been had a chance to talk to, a lot of farmers anyway, go, okay, here we go again. And there's a lot of, maybe I don't want to use the word distrust, but I guess I just did in some of those numbers, because it seems like we're almost in a cycle. Whatever comes out this time of the year, we always end up revising it more than we should.
It will get revised, so there's definitely a lot of people out there saying, we think that yield should come back down, and maybe it does, but my point to people is if they bring that corn yield back down 2 and beans down 1 bushel, we're still right at trend. So that's still going to give us adequate supplies, and then we start looking at the currencies affecting the markets. So even if that yield comes back down, but if we cut exports, we could still be looking at pretty high stocks-to-use ratios compared to what we saw in those drought years.
Okay, a couple things you brought up. Let's go with that one. The other thing in the news, China and devaluing their currency, that has really made a mess of things.
It has. It actually has brought the dollar down a little bit, because I think we might prolong our interest rate hike a little later. But looking big picture, I pointed out a year-long chart of the dollar. It keeps steadily climbing. If you look at what it's moved against the Brazilian real, it's moved 30% in the last year. So $9 or $10 beans here has made $13 beans down there. So they're still living high on the hog on the prices, so it's going to encourage a lot of global soybean production.
The other thing that's coming, and I think a lot of people are starting to blow it out of proportion, is the possibility of this El Nino coming through and the impact it's having in the southern hemisphere right now. And again, that there's probably as much hyperbole as anything in the situation, but that's still a factor that folks should be looking at.
It is. It has made things pretty decent right now, but they are worried about how it's going to affect the weather going through probably that to February time frame. So we could have some pretty crazy weather. And then one possible bright note, I've read a couple articles about moving from El Nino to La Nina next year. Could possibly have some adverse growing conditions in the U.S. next summer. So that'll be something to keep an eye on, and hopefully for Nebraska farmers we actually have a little bit of weather volatility in the market back east to give us some pricing opportunities again next spring.
So the bottom line is work with your advisor, come up with a plan, stick with that plan.
That's right. Like I said, we talk about the futures market a lot, but we're trying to educate guys out here to separate out your decisions into 3 different things. Looking at futures and that grain you can store, look at carry, and basis levels are usually the best after harvest. So we want to separate out those decisions into 3 different things.
All right, Clint, if folks want to learn more, talk to you, how can they do that?
You can give us a call. We're in Lincoln, Nebraska at 402-484-7474, and our website is agriskconsulting.net.
All right, Clint, great to see you again.
Yeah, thank you.
Clint Hoffman from the ARC Group in Lincoln has joined us from the Soybean Management Field Days outside of Greenwood. I'm Ken Rogers.